In today's video, we're looking at my favorite small account growth day trading strategy, the moving average crossover. Now, I've made a lot of videos about this specific strategy, but this video is a little bit different. In this one, we're walking you through step by step exactly how we approach this trade and then actually trading it using Thinkorswim's on-demand feature. This strategy is really great for small accounts as well because it works on stocks under $2. If you watch our live stream, I've been running at around 80% accuracy using it. And so again, it's just a really great strategy to help grow a small day trading account. So make sure you stick around. What's up team, it's John and I'm finally back uploading content. If you didn't know, the last few weeks I've been battling nausea and vertigo, dizziness. I'm pretty sure it's Meniere's disease as that runs in my family, but I'm finally starting to feel better, and so again, we're back uploading content. Today's video is a pre-recorded class that we did with all of our members, subscribers, and viewers where we just talked about different strategies and patterns, and in this specific video, like I said in the intro, we're talking about small account growth strategies. Now, these are classes that we're going to continue doing at least a few times every single week, and so if you want to be involved and watch these classes live as they happen, make sure to join these two Discords. The first one is Trader Mike's Discord. It's super active penny stock Discord that has a lot of talented traders there. We usually post the Zoom link in his Discord so all those traders can help join us and watch these things live. And so I'll include that link in the description if you want to check it out. You can also join our very own Discord, and we have Mordecai and Scott and a few other people that join us live for these streams that are also in our very own Discord in pre-market, talking about what's moving and stuff like that. And so again, I'll include both of those links in the description if you do want to catch these classes live. Remember guys, if you want to help support our completely free day trading, swing trading, and investing content, don't forget to hit the like button, hit the subscribe button below, and if you click the bell next to that, you'll get an alert every time we go live or drop a new video just like this. Now, with all of that being said, let's take a look. Again, we can go to add study, moving averages. You add the EMA, it's the 12 EMA and the 26 SMA. What I like to do here, and if you want to use the exact same setup that I use specifically, I just use for the white line, I use the 26 SMA, which is the long-term moving average, and then for the blue line, I use the 12 EMA. And so you can see here, this is an exact setup of this crossover strategy, and what we're really looking for is we're looking for a bounce at the open, or we're looking for a gap up in pre-market and after hours. So we want to see a stock, usually it's going to have a catalyst because these are penny stocks, and so most of the time you're going to be able to find a catalyst, sometimes earnings, sometimes they're biotech stocks, and so sometimes they'll have some good results, phase 1, 2, 3 data that comes out for them. The catalyst is less significant in my opinion. I think what's the most important thing really is the float. I think with the small float, it works much better. And I think the reason it works better is just because, individual traders are causing that momentum a little bit easier with the smaller float. So I'm usually looking for anything between like 1 and like 15 million as a float. And so if we want to get really specific, I'm looking for a small float between, anything up to really 15 million. The smaller the float, the better, because it's going to have more momentum. And this is a momentum strategy taking advantage of the moving average crossover. Like I always say, then at the opening bell, leading up to the opening bell, we're looking for a drop. And now the drop is significant because in order for these two to set up, in order for the 26 SMA, this white line here, to be above the 12 EMA, we need a downward trend. So you can see here, like this downward trend that we get is actually causing this to set up. And so if it opens up high up here, it's not necessarily going to set up for the crossover. We need it to open up exactly like this. And so if you look here, you can see into the opening bell, we have the crossover play, and we have these two moving averages getting closer and closer together. Another key thing that we want to look for this specific strategy is obviously we want to look for distance away from the VWAP. So we need this moving average, or we need the moving averages to be, extended away from the VWAP. We need this extension because again, a lot of the time when we actually get the crossover play, it's actually crossing over the VWAP, and that's giving it even more momentum. But if we open up right around the VWAP area, in my opinion, I think we're just a little bit more neutral and choppy, and a little bit too extended for a firm breakout using this strategy. When we open up right around the VWAP and it's not dropping before the bell, then it's just a little bit too extended for the breakout, and then we're just going to get a lot of fake outs in that way because of that. And so I hope that makes sense to everybody, and all of those different conditions are crucial here because, again, we need that burst of momentum, and if it's too extended up when the crossover actually happens in that first 15 minutes, then we just don't get that. And I just noticed it works a lot better when we open up well below the VWAP, when we have a downward trend to set it up, and then we attack it in the first 15 minutes. Now, again, just to go over exactly what we're going to do here, we're going to start this recorder. This is using Thinkorswim on demand, and this basically allows us to go back in time and replay any market day in the last few years. And really, since the stock's IPO, we can kind of go back and see and retrade any stock during any day of the market that's been open in the last few years. And so it's a really valuable tool, especially for us trading on the weekends and for us to practice exactly like this. It's just really convenient to go back in time and just retrade any market day that you really want here. And that's what we're actually doing. Let me see if we got any. Okay, good. And so yeah, so here's you see the moving averages getting closer and closer together, and this is what you'll see me trade on stream. This is actually a trade that I did get involved with on Monday of last week. And so we're looking for this crossover play to actually happen here, and we're just kind of sitting here waiting for the crossover to present itself. If you get in a little bit early, it's going to fake you out a lot of the time as well. And so you want to make sure that the moving averages, the 26 SMA and the 12 EMA, that they actually cross over. Usually that's going to be brought about by a break of the previous high of the day. Like if you see here, we're kind of developing a range here that we can look to break out. We do have these 2 1-minute candles here, and we do have this range to break out. And so as I'm waiting for this strategy to present itself, I'm basically just waiting for this range right here to break, because I know once this candle or the next candle or so breaks this previous high right here at 472, then that's going to give us enough momentum to actually get the crossover play to actually happen. And so again, here's the 2 moving averages. We're just waiting for these two to cross over and under each other. All right, so there's the breakout here. I'm going to jump in on the bid. A lot of the time I'm using the bid price to jump in because that's going to keep it at a limit order, but it's also going to give me basically an automatic fill. And so once you see the crossover here, you can see it actually showing up. You see the 26 SMA crossing underneath the 12 EMA. You can also notice that we do get that burst in momentum here starting to show up. There's about a million shares traded in the last minute, giving us some nice momentum here. And again, what you'll see me do a lot of the time with this specific strategy is you'll just see me scale out of half the position as we start to move up. So I'm going to get out a little bit more on the asking price if it lets me, just for this. Okay, yeah, there we go. So I got out of half of it on the asking price, which again is basically an automatic fill. And once we get a nice little push up, we can start to, you can either do a few different things here. You can either scale out, or you could just keep it one and done. I think if you're a new trader, what you really want to try to do is just keep it one and done. Scaling is a little bit more sophisticated and a little bit more difficult to get used to, but it will help kind of lock in profits, and that can be a really valuable thing as well. Back to this level. Again, this is something you want to start to understand, is that when you do have this range here, you could look for this range to break, and you can use the crossover strategy as kind of a entry indicator. Okay, so we get the crossover, now we can enter. And that way you can have a really tight risk. Maybe use this $4 level as your risk. Give yourself a 1-to-1 ratio. So if you get in now, your risk is 30 cents. You could set a 60-cent reward target if you want. So you could get in up here at $5 if you're planning on it, or you could just get out at 1-to-1. So you can give yourself a 30-cent risk and a 30-cent reward. And that's usually how I do the risk-reward ratio as well. I try to keep it at a 1-to-1 ratio. But the reason for that is because I can, and because this strategy is accurate enough to where a 1-to-1 ratio is fine. If I trade a 1-to-1 ratio with this setup, then I'm still going to be very, very profitable because it works, 70-80% of the time. Again, here we could start to see the crossover here. Just to kind of redo this example, we could start to see the crossover play here, but I prefer to wait for some type of confirmation. So I want to see it break this previous high right here and then maybe ride it up to $5. Maybe break a $0.50 level. Makes sense too. Let's see if he allows us to jump in. We'll just get in with a market order just to keep it easy. And then once we get that push, again, we decided to get into this instance, just to pause it real quick. We decided to get in at 470. And so using a 1-to-1 ratio, if I was in this specific trade, I would probably want to use a risk level of like 430 right around here. We do have some confirmation right around this 430 level. We have that low. We have this pre-market level. If we extend it to the left here, you can see we have this top right here in pre-market. We've got a little bit of confirmation back before that as well. And so I'm using a subjective pre-market level as a risk. And so for instance, if I get in at 470 and 430 is my risk, that gives me a 40-cent risk. Okay, so if I get in, there's a 40-cent risk. And so with that type of trade where I'm giving myself a 40-cent risk, then we can give ourselves a 40-cent reward target. So if we enter at 470, our reward target can be 510. And that way it's a 1-to-1 ratio to take advantage of, and you can have enough room to actually, continue pushing up and take that profit from the trade. You can just kind of ride it up, and building this type of trading plan is important. And the reason it's important, guys, is because I've talked about it on stream before. But when you build a plan like this, it allows you to have less emotion in the trade. Because if you build a plan like this, you know exactly where you're going to exit, you know exactly where you're going to enter, and it leaves less up to chance ultimately, because you know where you're going to get in, you know where you're going to get out. There's less subjective thoughts there, and it's going to cause you to have less emotions in the trade. You can just kind of follow your plan that you built beforehand and just kind of stick to your entry and exit points. And again, that's going to be very beneficial for your emotions, especially if you're a new trader, because you know exactly where you're going to get in, you know exactly where you're going to get out if it goes against you or if it pushes up as a success. That way you're protected and it's just not stressful. It's not as stressful as it would be if you just kind of blindly jump in and you don't exactly know what you're planning on doing, so forth and so on. And so one of the things that helps emotion, again, is just building that plan beforehand. And so I don't know, I don't even know what this one's going to do, to be honest. This is mostly the crossover play here. We already got the breakout with an entering at 430. I'm just trying to show you guys a different way to approach it. All right, got a team. Well, here's the thing though, the VWAP. Okay, so here's the thing. When a stock opens up like this, right, it's pretty extended away from the VWAP. And when a stock is extended away from the VWAP like that, when a stock is extended away from a VWAP like that, it shows that volume didn't follow it down. So you need the stock to drop a little bit into the opening bell. But when a stock opens up well below the VWAP like this, I don't mind letting it work up to the VWAP area. That's fine as well. What I would probably do in this instance, though, is I'd probably take half off here. That way, if it starts to drop or if it reverses and turns back down, then you're still relatively protected because you already took profits off. And that's usually how you'll see me approach these trades as well. If you can get really good at scaling in and out of positions, they can be really good protective trades to where if you're already up a huge amount, but you think it might go up more, you could take half the position off, bank that money into your account, and then try to give it time to let it work, giving yourself a tighter risk. But it's all subjective, Raphael, so everybody's going to have their own way of approaching it, All right, so nice little push here. And we can just try to give it time. But again, 1-to-1 ratios, yeah, there's the... all right, so yeah, there's the 5-10 level that we talked about. And that's how you keep it 1-to-1, at a 1-to-1 ratio. And we got just about that. All right, so we're going to go to TYME here if you want to follow along with this specific strategy. And again, you'll notice the same thing every single time with this specific strategy. You notice that I do exactly the same thing in exactly the same way every single time. Again, just like the last one, I'm looking for the same exact conditions. I'm looking for a gapping penny stock. Usually the range is... honestly, I prefer cheaper stocks like $1, $2 stocks, and it kind of works out really well because, like, even if you have a small account, right? Say you got a $500 account, you could buy 200 or 300 shares of TYME here, and so you're going to use all your equity, but you can get a fairly large position and grow your account fairly easily, considering how accurate this strategy is. It works really well on cheap stocks, $1.50 stocks, $2 stocks, $3 stocks. So if you don't have a huge account, this strategy is a great account building strategy in my opinion. Again, same exact conditions as last time. We got TYME here, a penny stock We get a nice gap up here, causing a nice upward move. We get some good relative volume in there. And then once we get the gap up, once we get this gap up here, then the next thing we look for is we look for a dip heading into the opening bell. Not only do we look for this dip here so that the 26 SMA, which is the white line here, can be above the 12 EMA, which is the blue line, but we also look for the dip because we are extended away from the VWAP. We're opening up extended away from the VWAP. That way, whenever we get the crossover play happening, we get the stock pushing up towards the VWAP level, pushing up into the VWAP at the opening bell. Again, this is what you kind of want to see for this strategy leading into the opening bell. You want to see this 26 SMA, this white line, to be getting closer and closer to the 12 EMA. When that happens, that way we can know this one's setting up for the exact strategy we're looking for, and we can look for the crossover play to ultimately happen. Alright, so here's the next example, and if you want to follow along with this one, it's the same thing here. It's WORX. WORX, same date, which is August 26th. Alright, so yeah, the example we're going over now is WORX. WORX is this example. And again, what do we get here? We get a penny stock gapping up nicely. We get a really nice push up, and then we get a drop before the open. So again, we got this downward move here so that the white line is moving towards the blue line. Again, what do we look for this specific strategy? We look for two things, really. We look for the white line to be above the blue line, and we look for extension away from the VWAP. So what do we have? We have extension away from the VWAP here. And we have the white line moving ever and ever closer to the blue line. So we have the 26 SMA moving closer and closer to the 12 EMA. And that way, once the opening bell like this happens, we can just kind of essentially wait for the crossover play. Alright, so let's go ahead and press play here, and we're going to do the same thing. We're just going to get 1,000 shares. But again, all those conditions set up in penny stocks, then we're good to go. We know we are actually ready for it if we have all those different conditions. Gapping penny stock, preferably a low float, but not necessarily so. Extension away from the VWAP, we need the stock to open up well below the VWAP, and then we need the moving averages to set up in a way to where we could potentially get that crossover play in the first 15 minutes. Alright, and so again, we have this range here. Usually, let me pause it really quick. Usually it's just like I said before, like this is something I've been noticing, is that we have this opening range. We have these two 1-minute candles here. Usually for the crossover, you're going to get kind of a range breakout. And so you can see the range here. We can document that range. Usually for the crossover, you know, especially, we're just waiting for that range to break. Because once that range breaks, we're usually going to get the crossover play. And so that's all we're waiting for, is for that range to actually break. All right, we got it here, and this is actually a little bit better. This is another way. Let me pause it, and this is probably, so once this candle open is really when we got the crossover happening. Let me, I might be able to rewind it for a second. But that's actually when we got the crossover to happen, is on this new candle, is when we actually got the confirmed crossover. And so using that, we do have, it's even less extended up when we actually decide to get into it. And that way, a lot of the time, we're going to get a 3-bar play kind of in there as well. And so you could kind of combine both the different strategies that I backtested, the 3-bar play or the 1-minute pullback, and the crossover strategy like this, and see if a 3 or 4-bar play will actually work kind of simultaneous to that. Let me go ahead and pause it here as well. So my entry was 219. Just to review the risk and reward levels, my entry on this specific trade was 219. And we can use or my entry was 219. I think we could probably use a risk level. Let me see if 219 has a little confirmation here, or 210. We could probably use 210 as a risk level here as well. You could also use $2, but I think that's a little bit too much for it. But I think 210 is a reasonable risk level. If we got in at 219, that means our risk is 9 cents, and our reward target should be 228. So we have a 9-cent risk and a 9-cent reward target. That way we know exactly where we're going to exit this one if it goes against us, and we can try to let it play out here. And there's the rip up, 226. We're going to take half off there at exactly the same level we talked about, that 228 level. We got up there for a split second, and we can let the rest work here. Pushing up some more, and we can get out the rest there. at exactly, oh wait, we're still holding 100 shares. But yeah, we can get out the rest there at exactly 228. So again, we got 10 cents, or we got 9 cents of risk, 9 cents of reward, and it works almost every single time. Anyways, team, that's it for this video. Remember, if you want to help support our content, you can go check out Webull. If you sign up, you get a free stock, and if you deposit $100, you get another free stock. And it has free paper trading, 0 commissions, plus more, and it's a great way to help support our channel. I'll include that link in the description for you to go check out. I'll also include our Discord links in the description if you want to hang out with us after these videos or streams. Good luck in the markets, guys, and we'll see you all next time. Have a good day, team.